Hi, everyone. Welcome to the final Carson's Take 5 of the year for 2023 with Ryan and Sonu. Sonu, where did this year go? We're like at the end.
I know, it just flew by, didn't it? And it was a pretty good year, too. What about you? Do you think it was a good year?
Well, there's a lot of ways to look at this. I'd say for my sporting teams, we don't need to talk about sports too much. I don't know if it was that great, but boy, oh boy, for the economy, which avoided a recession, even though we were promised a recession this time a year ago by many economists on TV, avoided a recession, and stocks are up like 20% for the year. At least the S&P is up more than 20% for the year as the time we're recording this. So I'm going to say that's pretty good. But we're actually going to title this one what's the exact title, Sonu? The
Fed pivoted and stocks like it.
And stocks like it. So the Fed pivoted and stocks like it. So let's go into that, because what we've seen, we got a big rally this year, Sonu. But just in the last week and a half or so, we've seen even a bigger rally, right? Stocks have even gone, it feels like, more parabolic. And that's because the Fed, I'll set this up and turn it over to you in a second here. The Fed hiked interest rates aggressively, as everyone knows, right? From over 0% to over 5%. Why'd they do that? To slow down the economy, to slow down the generational highs in inflation we've seen. Good news, inflation's coming back. So what does that mean, Fed? I just called you Fed. What does that mean, Sonu, from the Fed? What's the Fed going to do now, you think, and why does the market like it?
Look, the Fed's not hiked since July, so that's a big thing. And I think it's been clear for some time that they're not going to hike again. So rates are as high as they're ever going to get in the cycle, safe to say. But the other thing they did, last week with their meeting is, look, inflation's coming down. That's the big story. And they're finally acknowledging it. And because of that, look, if inflation's coming down, if you're a Fed official, what do? You pull down estimates for future inflation. And because of that, you pull down estimates for future interest rates, right? Mm-hmm. So they're saying right now the current policy rate, interest rate that they benchmarked is 5.4%. By, end of 2024, they're penciling in 4.6%. So that's a cut. That's probably 3 cuts of 0.25% each.
Wow. Well, that would be now. Here's the question then. So in the past, when the Fed has cut, Sonu, we've seen bad things, right? 100-year pandemic, the Fed cut. The tech bubble, the Fed cut. What else was in there? The tech bubble, great financial crisis. How can I forget? The Fed cut. You're telling me the Fed might be able to cut next year and we'll be okay?
Yes, I think that's it. There's a difference between the Fed cutting into a recession because they think growth is slowing, they need to boost the economy a little bit, versus the Fed cutting when inflation's coming down. And I think probably a better comparison, Ryan, maybe the mid-90s. They raised rates a lot in 1994. And then in 95, Alan Greenspan, who was the Fed chair at the time, decided, you know what? Inflation's coming down, we think, because of productivity increases, things like that. And so we can ease up on rates a little bit. And I think that's going to happen next year.
Well, let's hope so, because again, if that were to be more of a mid-90s scenario where the Fed was aggressive in 94, upset the apple cart. Remember, Orange County went under, some other problems happened, but the economy shook, it wobbled, but it kept going. Sound familiar? Regional bank crisis. A lot of banks literally disappeared overnight earlier this year, this March. The economy struggled a little bit, but now we've gotten through, and it looks like some really decent growth, in our opinion, is coming. So let's just think about these things. So 2 years ago, stocks lost more than 10%, right? That was actually like 20% 2 years ago, 2022. This year, 2023, probably going to gain more than 10%. It's safe to say we're up over 20 right now. So you're down 10%, then up 10%. What happens next? I found 6 times in history you had a scenario like that, and that's what we're looking at next year. Stocks were higher every single time, up about 12% on average. If your average year gains about 8 to 8.5%, that could be a little bit better return next year. And that makes a lot of sense to us. Low double-digit returns. One more for the listeners. We've seen a blast of strength recently. I'll keep this very simple. A lot of stocks have broken out to 20-day highs. So what in the world does that mean? Well, for a while, we heard only 7 stocks are going up. These big 7 stocks. You've watched TV. You've heard about the Magnificent 7. What we've seen in the past couple of weeks, a lot of stocks have broken out to about a monthly high. What does that mean? So I took a look going back to the data a long time ago. Only 10 times we've seen big surges like we've seen recently. 1 year later, the S&P 500 was higher every single time, up 18% on average. And that, again, just triggered last week. So there's different ways to look at this. I think the key concept, the economy's strong. The Fed is likely done. The Fed has pivoted, as we talked about, and stocks like it. Probably some cuts next year. Economy strong. Consumer strong. By the way, hey, stock market's got a lot of momentum. it might keep going higher as well into next year. Sonu, we have 30 seconds or so, and I know you've got to take the kids to school here, so we do have to wrap this up. Any final comments on the last Carson's Take 5 of 2023?
All I can say is happy holidays and happy new year. Thank you for I think 2023 is a great year. I think from an economic perspective, look, the Fed raised rates. We got to the highest rates in, close to 2 cycles here since the mid 2000s, and the economy didn't go into a recession. And there's a lot to look forward to in 2024.
Absolutely. There's a lot to be thankful for. We were promised a bear market. We were promised a recession by a lot of people. Fortunately, that did not take place. If you listen to us for a while, we were taking the other side of that. And the good news, we still take another side. We still think 2024 is going to be a lot better. We look forward to everyone joining us every single week next year in 2024 as we continue to do these Carson Take 5s. And with that, again, this was The Fed Pivoted and Stocks Like It. We'll see everybody next year. Take care. Thank you.